Good morning, happy Friday to you. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew, with me is Cheryl D'Souza, and we'll take you through the next 1 hour of trade. And it's quite the rosy picture at the end of this trading week, with the Nifty-50 and in fact the benchmark indices, both of them having bounced back from a couple of days of a weak trading. Nifty-50 currently trading with gains of about 1.2%, comfortably above the 15,000 mark in trade. Let's look at some of the constituents then, and among the top 10 gainers on the Nifty-50, you'll see 8 financial names. The likes of IndusInd Bank, HDFC Twins, Bajaj Finance makes the list. You have Kotak Mahindra Bank, Axis Bank, all of them leading the gainers today, and not too much to speak of in terms of the losers. Only 4 of them losing ground, and Power Grid Corporation the worst of them, only down about 0.7% or thereabouts. So the sectoral picture, I'm pretty sure you would have guessed by now what that is going to tell you. And yes, all of them are in the green right now, but gains are led by Nifty Bank. A couple of other sectors are also doing reasonably well. You have the media index that is up and about 1.6% higher. You have the Realty index that's about 1.9% higher. But the others are really not doing too much. About 0.5% gains for the Nifty, for the Pharma, and for the IT pack. Metals is up and about again 1%, but that's par for the course. Broader markets are keeping pace as of now, with the benchmark indices trading with gains of slightly less than what you're seeing on the Nifty-50 as of now. But it's looking like a good day of trade overall, Cheryl. Clearly, earnings is going to be in focus, with 4 Nifty companies posting their results today.
Definitely, Alex. Good morning to you and happy Friday as well. And like you said, earnings are definitely at the forefront. You have SBI that will be reporting its Q4 earnings today, along with Hindalco as well as JSW Steel. So all of these counters are definitely in focus today. Apart from that, you have HPCL strong gains coming in post its Q4 earnings, as well as that dividend surprise coming in for HPCL. That counter is in focus. Havells along with Z Entertainment, as well as Torrent Power and KNR Constructions. All of these companies are a buzz on back of their Q4 earnings. You have Brookfield also, that is Brookfield REIT, that is also buzzing in trade. So like I mentioned, most of these counters that are in focus today are all on back of their earnings. You have SBI that will be reporting its Q4 earnings today, so all eyes on SBI as well. So that is how the cloud is looking like today. HPCL clocking in good amount of gains. You have Torrent Power also that is gaining on back of its earnings. You have Hindalco that is in focus because they will be reporting their Q4 earnings later today. So all eyes on that, as well as JSW Steel also is going to report its Q4 earnings today. So that is how the BNSN cloud is looking like this morning, Alex. But definitely, I'm sure all the investor focus will be on SBI. And what else are you actually catching in trade today, Alex?
Well, Cheryl, just the context is very important to understand, right? It's been quite an eventful week for risk assets globally. You had the cryptocurrency crash earlier in the week, but then they've sort of stabilized, with the Bitcoin coming back to the $40,000 mark. And you have risk assets across the globe that picked up in trade. Starting with the US markets, they bounced back smartly. And I think to a certain extent, the jobs data that came in slightly better than expected, put focus back on the economy, which is trudging back to pre-pandemic levels and really is looking stronger by the minute. But that really is a focus, and as a result of which you had the breadth that was quite good in the Asia Pacific region, and I think that is flowing into the Indian markets as well. So flows data, very important to watch. In the automotive space, the stock that has been in focus of late has been Tata Motors. Now, you'll remember earlier in the week it posted its Q4 earnings, and it was largely expected to post a consolidated net profit, but it posted a loss on account of exceptional items. We're speaking to the management of Tata Motors, in fact, and that is something that we have for you right now. We've got Mr. Balaji, who has spoken to ET Now, and here's that conversation.
If you recollect, in February, we had the JLR Investor Day, where we had specifically spent good 2 hours explaining on the reimagined strategy of JLR. And in that, what we called out is a few things. One, we said JLR's basic DNA will be modern luxury by design, number one. As part of that, we said Jaguar will become fully electric as a vehicle from 2025 onwards, premium luxury BEV electric vehicle. And Land Rover will have 6 BEV vehicles coming in from 2025. And by 2030, we'll have every one of our vehicles will have a BEV option. And by 2036, we'll become 100% zero tailpipe emissions free. And those are very big decisions communicated and decisions also which are getting implemented as we speak. And due to that particular set of decisions that we have taken, we said we will also have those investments that we don't intend to pursue going forward. We'll be forced to write them down. And we'll also restructure our employee base. We'll also restructure since some of the vendor commitments that we have made, we'll have to now write them off. So we called out in February this year that we'll have a 1.5 billion. That's roughly about 15,000 crores kind of a hit that we'll have in our P&L. It's a one-off hit, of which close to 9,000 crores will be 950 million pounds will be non-cash, and the rest will be cash payout that will happen in FY22. This is what we called out in February, and that's what you're seeing as numbers. There's no change in those numbers from thereafter. That's the debit side of the equation. The credit side of the equation is probably where the surprise is, because passenger vehicle business, if you recollect last year, same time, we had taken an impairment of the business close to about 1,500 crores, we take an impairment. And we also had a onerous contract provision, which we took because our volumes are much low and COVID was there in front of us. And therefore, we had to, accounting will force you to take that calls.
Yeah.
Now, with the performance of the PV business that has come through very, very strongly and continuing to do well, both on an absolute basis as well as on a relative basis, the underlying performance is lifting multifold. And therefore, we now are reversing that provision and actually releasing the impairment provision that we have taken, which is more of good news on what the business is. So one is an extremely strategic call being made on pivoting the business towards electric, which is what everybody wanted us to do. And that's what we are very clear we will do. And the other one is a confirmation of the fact that the PV business is now firing all cylinders. So therefore, both these are actually pieces of good news that the market should be understanding it as. But yes, some people have understood. Most people have understood it. A few people haven't understood it as yet.
Speaking about the EV side, sir, and the electric vehicle dream. Now, obviously, given the fact that you are the financial side of the person, so what I'm going to ask you is, many say that the whole road to electric will be a slow burn, and this will peak later. What's your assessment, given the fact that you're taking impairments, you're moving ahead with that strategy? By when do you think EVs will start really be one making money and will have a sizable market share?
Let me take India, for instance. Yeah, that may be where the numbers are close by. We'll also understand it better. In India, take Tata Motors portfolio in 2019, 2020, 2021, 3 years which I take. We were 0.2% of our business was EV in 2019. Today, it is 2% of my business is EV. This is an exponential disruption. So we will invariably overestimate near term and underestimate long term. So it will keep giving disappointments in terms of numbers. It's not that big as we saw. But one fine day it will flip and then suddenly it will be taken completely by surprise as the speed of the force there. So what to watch out for is the penetration rates, how fast is it moving? And if I see that sequence, 0.2, 1, 2, that is an extremely fast adoption that is now happening from underneath. And we won't realize it till it comes and hits us. And we are very clear this number will go to as high as 10, 12% by 2025, 2026. And it can even cross the 15, 20% zone by the time we hit 2030. So therefore, this can be a very large disruption coming at us. And as Tata Motors, we are very clear we'll drive this disruption. We are not just going to watch it happen. We will actually make it happen. And for that, we will look at the entire ecosystem, solve the problems at every level. And take statistic today. Yeah, take the month of April. Midst of lockdowns, Nexon EV sold 581 vehicles. So the clientele that is coming in is different. The demand for the vehicle is strong and the performance of the vehicle is excellent. And therefore, I'm seeing this as India will leapfrog this disruption. It won't go through the PHEVs routes. It won't go because its cost of 2 powertrains is more than cost of 1 powertrain, which has simple mathematics in that one. And therefore, we do see this as a significant intervention that we will make as Tata Motors.
Speaking about the global markets, sir, and you're speaking about JLR, how has the last few months been when it comes to demand, when it comes to China, UK, the emerging markets, and USA?
See, I think what's happening globally, which is great news, also gives us a lot of comfort, even for India for that matter. As vaccination started maximizing and you start vaccinating significant chunks of your population, economic growth is back and back with a bang. And today, China is firing all cylinders for us. US is firing all cylinders for us. And UK, you can start seeing the lift happening compared to what was till quarter three, what the growth was. Now, the decline was just 7% last quarter. So I am expecting UK to come back to growth, Europe to come back to growth. Today, it is fair to say, and touch wood, hope it remains that way, that there is not a demand issue in JLR today. The challenge for all OEMs is more supply. And therefore, what we are seeing is a complete clear out of inventory, be it in retail level, be it at wholesale level, be it at supply floats. We are doing everything possible to maximize the available level of semiconductors out there. So mix is improving, VME is reducing, inventory levels are going down, dealers are getting profitable. That's how the current thing is playing out. But it is fair to say that we are not able to meet customer demand to the extent that we would love to. And therefore, that's going to take at least 2 quarters before it really becomes all right. So we are saying Q1 will be significantly impacted, which we have already called out in our press release. Q2 onwards, things should gradually start improving. And H2, I'm hoping, and that's what all of us believe, things should start normalizing there onwards.
Speaking about semiconductors, sir, globally, what is the situation? Because in India, in the past 1 month, we have been really going around with the lockdown and other problems of our own. But globally, what is the semiconductor situation right now? Is the availability better than how it was, say, a quarter back? And how do you see it going forward?
Q1, all the Q4, I think as JLR and Tata Motors, we scraped through. We didn't get significantly impacted by the semiconductor shortage. But as I look at Q1, we do see challenges, and that's the reason we have called it out. It is not normal, and it is likely to be significant. So the adverse impact, we have called it out. But thereafter, we do expect things to start normalizing and improve from there onwards. Obviously, this is the thing to notice is that automobile demand for semiconductors is it's a drop in the ocean of semiconductors. So a little bit of allocations, if it starts switching away into or switching towards automotive, suddenly there's no problem. Or there is, so it's a small number. That's the reason we don't want to create sensational news giving impact on production, etc. Because we will want to fight till the last day and see how much ever we can eke it out, and then we will deliver against it.
Speaking about the input cost pressures, sir, how are they looking at this point of time? It is one of those scenarios where Motown in India especially took 2 price hikes within a year. That's not generally what it happens at such close quarters. But how is it looking right now? And going ahead, what kind of pressure it can have on the margins?
See, today we see steel, aluminium, precious metals, all of them inflating and significantly inflating. And therefore, this is something which has been a challenge. Last quarter, we started seeing the impact of it. Even in my P&L, you would have seen it. And we do expect this situation to continue in the first half of this year. Obviously, India has also got another reverse impact of the lockdowns. And therefore, today, I think it's a choice between demand versus inflation. How do you play that stuff there? So currently, contracts are not being negotiated as we speak. Everybody just frozen right now at this point in time. But second half, will things start quietening down? That's our hope as such. At least what we speak to the various people, we do understand that things have run away a bit too much, and therefore there's likely to be a cooling off in the second half, at least getting back to normalcy. But that's all speculation. We'll have to wait and see how exactly it plays out. What is more important is what are we going to do about it? I think we will take judicious price increases, which we've already done. We are trying our level best to protect the end customer so that whoever has ordered the cars, we are not impacting them with the price increase till May 7th. Whatever was the 7th May booking, you will not get impacted. May 8th onwards, yes, the new price will come into effect. At the same time, huge focus on cost reduction, huge focus on, which we have done a very good job of over the last 3-4 years. So we'll continue to keep a good focus on that. But I do believe the right metric that will come and go against the inflation will be operating leverage once the lockdowns lift. Because I think there's no point looking at the near term alone and start looking despondent about it. But if you look at what happened in the last year, When the lockdowns lift, it's a humongous recovery that comes through thereafter. And I do expect passenger vehicles to really take off after that, because people are going to be even more keen to have their personal mobility, where their urge to break free, all that comes through there. And for commercial vehicles, I think we have seen a pretty horrendous period over the last 2 years in terms of demand. Last year's demand, FY21, is that is actually lower than what it was in FY10. So we are now 10 years back in terms of volumes. And you know it better than I do that commercial vehicles are a more reflection of what the GDP in the country is. Our GDP hasn't gone back 10 years. So therefore, neither do I accept the fact that this demand is indeed that. And if you're able to start making money at those kind of volumes, imagine what happens when things start correcting. Second is, looking at volume alone in commercial vehicle is not good enough, because we have taken almost 10-15% price increases because of BS6. So the revenue is actually starting to now lift much higher. Last quarter, for instance, the revenue is higher than what it was in FY19, for instance. So, and then the mix, which has always been against MNHCV for the last 3 years, that needs to come back as well. I think there is a lot of things going for commercial vehicles subsequently, but we just have to see through the immediate pain. So that's the reason when we are looking at our strategy, this year is very different from last year. Last year was a business continuity plan, because we didn't know what's going to happen. Do we need to? So the focus was survive, revive, and grow. That's how we looked at last year. This year is saying no, it's not none of these three. It's actually being agile, because
interview.
Coming in from the management of Tata Motors, talking about the demand scenario, talking about the EV commitments as well as the semiconductor issue. Well, on that note, we slip into a break on this edition of Buy Now, Sell Now. But when we come back from the break, we will come back with the experts and your queries, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now, and it is time for us to go to the query segment. I know some of you have been waiting on social media. Thanks so much for waiting by. We're going to take as many queries as we possibly can over the next 20 minutes or so. Let me introduce our two guests for today. We've got Kunal Bothra as usual, and we've also got Sharmila Joshi. Welcome to the both of you. I want to start with you, Sharmila. And we've got the banking pack in focus today, quite a few of them doing quite well. But Danny Verghese has got a question on Axis Bank. Would you enter this counter right now for the medium term, short to medium term?
I think that could possibly sort of stop me from entering the stock now would be, there has been some news that Suti will sell off its stake in Axis Bank. So that will obviously create that overhang, and the price may not go up too much. But, in terms of numbers and other parameters, it's a fairly decent stock. I would, of course, say that within this space, possibly at these levels, ICICI Bank is my favorite stock. But Axis Bank is, if you have a long-term view, is fine. Maybe I just hold off a little bit before buying.
All right. Good morning, Sharmila, as well as good morning, Kunal. Kunal, I'll come to you with this query, and our viewer Sagar, he wants to know what's the view on JK Cement. He's bought about 6,000 shares at 1,150 to 75 levels. He's saying the stock has actually rocketed from those levels. Should he hold or book profits? What's your view on JK Cement? Another good investment coming in from Sagar.
So congratulations to the viewer Cheryl, for holding the stock at such a crucial level. I think 1100 or 1250 apparently was the breakout point for JK Cement. And post that, we've seen a lot of rally coming up into many of the cement stocks. It's done fabulously well from 1200 levels to now just about perched at 3000 odd levels. Looks very attractive on the charts, and I would sense that if you are in from a longer term view, then you can continue to hold on to your investments. If you're probably looking for trading stop loss, then I would suggest maybe a 2750, 2700 as a trailing stop loss zone for JK Cement. I think that's a very important support. The stock has been holding on to this range for last 4 months. So if it manages to hold on even over the near term, then I believe that the rally could build on for the stock. So hold on to the stock and probably keep a trailing stop loss around 2700, 2750 mark.
Okay, let's take another one. This one is from Balan. He's got 500 shares of Happiest Minds bought at 800. Coming to you on this, Sharmila, would you hold on to this investment or would you sell at this juncture?
It has come up from the price that he bought it at. So that's something that he needs to watch for. But I think, in terms of where the company is and in the line of business and the kind of numbers they've been doing, I would really request him to stay invested. And it may take some time because I think the valuations have gotten a little ahead of themselves. But I would think that if he is a long-term investor, he should continue to hold on.
Next one is for you as well, Sharmila, and this query is coming from Jovi Sebastian saying that Bata or Relaxo, which is a good bet for the longer term? Could you suggest which of these footwear players makes sense to be invested over the longer term?
Actually, both are good, and both have their sort of niche segments that they are present in, and they have continued. Bata obviously has that MNC flavor, and Relaxo is a domestic company, but the kind of products that they have and the price points that they have, I think post the kind of relaxation that they had gotten in GST for the footwear below a certain price, both have a very decent product range there. Bata possibly has a better footprint in terms of the number of because it has its own stores and it also is present in other stores, etc. Relaxo's model is different. But to my mind, both are okay. Maybe I would give a slight preference to Bata. But having said that, I think if you're a longer-term investor, both seem fine.
Okay, we've got a question from Santi, and Santi is what advanced enzyme technologies at, or rather he's looking at advanced enzyme. The current market price of around 486. He says that it's trading above lifetime high, and he's asking whether it makes sense to take a fresh position, Kunal, anticipating a much higher highs in the short term with a stop loss of 440.
I think it's a good trade. Yeah, I think 440 is good enough support for advanced enzyme. It's the support from where the very recent rally, which started I think a week back, for the stock, I think started off where it managed to bottom out or plateau out at the 440 levels, and from there you saw the stock gradually moving up higher. Decent pickup in volumes. I would not say great pickup in volumes because it's still lower than the monthly average volumes for the stock price. So I think it's a steady pickup, and I think when you're looking at it from slightly medium-term kind of a time frame, you can look to buy at current levels. But then I would suggest that don't enter the entire quantity over here because of the slight lack of volumes. I would sense that probably the stock would drift back into a consolidation for the next couple of days and then start to move up higher. So I would suggest a buy on dips, maybe starting at current levels and then wait for another 10 to 15 rupee dip. I think that could be a prudent strategy for advanced enzyme.
The next query is coming in from Seema saying that she's bought 500 shares of Tata Motors DVR at 80 rupees per share. Wants to know whether she should book the profit or continue to hold on to Tata Motors DVR. Kunal, what's your take coming in on Tata Motors DVR?
I'm very bullish on both these stocks, Tata Motors as well as Tata Motors DVR. And I, for one, believe that that this cyclical uptrend which you've seen, or the change of trends you've seen for Tata Motors and Tata Motors DVR, of course, I think both these stocks could go into a multi-year uptrend even from current levels. So I think it's now a matter of patience, and it's now a matter of holding time. So I would suggest that if you have a longer-term time horizon, since you've purchased at a good price, I would suggest that you should hold on to your holdings on Tata Motors DVR. I think over the next 2 to 3 years, I would send somewhere closer to 200, 250 as a potential target range for the stock price.
Okay, Sandhya's got an interesting question, but Sandhya, I know that you referred it to Kunal, but I want to take the liberty of taking this across to Sharmila because it appears to be a fundamental question. So Sharmila, she's asking about the PVC pipes segment, and she's asking which company would you bet on. So you have the likes of Supreme, you have Finolex, you have Prince Pipes, which I think is a recent listing. Which would you pick, and are you confident that the sector will really boom in the years to come?
that what we are seeing is, and this move started probably a couple of years back when we saw that a lot of pipes which are used, in buildings, in residential areas, a lot of those were getting replaced by PVC and material other than metal. If you remember, back in the day, most of the pipes that we used to have running down our buildings used to be metal, but now these are increasingly getting replaced by PVC pipes. So it is sort of a industry sector that will move hand in hand with the kind of real estate development that we are seeing across the country. I possibly prefer Phenolics Industries in these, but I think Supreme also is doing really well. So it's a sector I like, and again, within the sector, if you go to see, each has its own niche and each has its sort of an area that it caters to better. So within the companies that we are speaking of, Phenolics and Supreme would be my choice.
All right, the next query is coming from Sumol Prasad saying that is it good time to take fresh positions in Balrampur Chini at current price for the medium term? So Sharmila, what's your take coming in on Balrampur Chini? We've seen a lot of these sugar stocks also gain traction of late. So what's your take coming on Balrampur Chini? Makes sense to invest at current levels for the medium term?
So I think the negative for sugar sector has been, the cut in their import subsidy that we've seen. So this will definitely, export. So this will definitely mean that, this is a sort of a semi-regulated industry. So there is no way that the government would want sugar prices to run away and make things more difficult for the domestic consumer. So this is a very good move from a domestic user perspective, but maybe not such a great move from the sugar company perspective. And this has been a sector that had really been running away with it, given the fact that the whole ethanol story is playing out, as well as the possibility of exporting sugar was playing out. So one it would seem, that part would sort of slow down, which is why you're seeing this correction today across the sector. But ethanol remains a story that can play out very well for this as a sector going forward. So I think that take a break from this sector, don't be in a hurry to invest in it. But if now when you look at it, definitely keep both these things in mind, that it is a sort of a semi-regulated industry. And then the big play for it going forward will be the ethanol story.
Absolutely interesting. And of course, the latest update with regard to the subsidies is playing a big factor today in the correction that you're seeing across the board. We've got a question from Padma on Orient paper. And Kunal, this one's for you. Hopefully, you can tell me something about this. Bought at levels of 21. Stock is currently trading at 27 or closer to 28. Would you book profits at this juncture?
No, in fact, I would suggest to hold on to the investments. Many of the paper stocks are actually going through a breakout. So, there have been, much better, quality stock, which have done exceptionally well, like I think JK Paper and West Coast Paper, etc. But I think Orient Paper is also lagging a bit behind. But, the chart patterns are developing quite well. The revised volumes on average have been quite better for Orient Paper as compared to the average of the last 1 year. So in that sense, which means that there has been some fresh buying which has of late happened to the stock price, and that generally augurs very well for the near to medium term. Since you bought at a good enough price and you're sitting in a profit of I think 6.5 or 7 rupees on your investments, I would suggest to hold on to your investments over here.
All right, the next query is coming across to you only, Kunal, and this is from Ritesh. He is our regular viewer, and he's saying that he shifted to India Bulls Housing June call 230 from May 220 call. He wants to know what should he do next. He's saying that there is it's actually gaining 16% and upwards. So what should he do next? This is on India Bulls June call 230.
So this is what exactly I was indicating yesterday, Shell. If you remember, we had a viewer who said, around 220 call, and I mentioned to hold on to the investments. And today, apparently, the stock has actually hit that 220 mark. So I'm certain that the 220 call for India Bulls Housing will probably have gained a lot of traction on the upside. I think from yesterday's price of 3.5 or 4 rupees, it had jumped up to almost 9.5 to 10 rupees, and that's a sizable return on your holdings for a call option. Now, if you're expecting the that the stock will cross back about 230 levels. It would be a tad bit much. What happens is after a certain sort of news flow, if you generally see a spike of 10-15% into a stock price on a very short-term basis, there is always a possibility that the stock will go sideways. The moment it goes sideways, even if you have far or the next month call option, the time value erosion could probably play a bit tricky. So what could happen is that maybe if the stock consolidates at this 15 to 20 zone for some more time, you might see the call option eroding value and coming back to say 3 or 4 rupees lower from current levels. So I would suggest that rather than holding it or trailing it higher on the upside, you should book your profits over here and then wait for the stock to cross back about today's high. That process could probably take another couple of trading sessions or maybe by 1 week. And once that happens, then I believe it makes sense to try and buy the 230 call option for June series.
Okay, I'm coming to you, Sharmila. I'm coming to you on this next one. We've got Shanmuga Sundaram, who's bought Federal Bank at 76, so making money at this point on the trade. But considering everything that you're seeing developing in the banking space, would you say that Shanmuga should hold with a view? So Shanmuga only wants to hold for a year. Do you think that this is the best contender in the banking space?
No, but as you said, he is making money, and if things stay sort of okay for the bank, then it has a possibility of going up to sort of 90 levels. But as we discussed earlier, I think possibly in the PSU banking space, SBI, whose numbers are expected today, could be a good stock to look at. Otherwise, we've spoken of ICICI Bank, Kotak Bank. These could be some other names. But since he's making money and the going seems good for now, possibly he can hold on till levels of about 90.
All right, the next query is coming from Rohit. He's saying that he has 200 shares of Glenmark Pharma that he's bought at 550 rupees per share. He wants to know whether he should continue to hold on to Glenmark Pharma or should he switch to Cadila. Kunal, what's your view coming in on Glenmark Pharma? Makes sense to hold on to the positions that Rohit has, or should he shift to Cadila?
Well, I think both of these stocks are top quality stocks from the pharma pack. I probably give more emphasis towards Glenmark Pharma. The reason why I believe that is because the stock over the last 7-8 months, so except for the previous month and current month, prior to that, over the last 6-7 months, the stock had remained absolutely sideways from 500 as a pivot point. It was in a range of 530, 540 on the upside and around 460, 470 on the downside. So when you generally see such an exhaustive range in terms of time and price, and when you expect a breakout to happen, the breakout is a multi time fold breakout, not just even price fold breakout. So if that happens for Glenmark Pharma, I believe that the stock can come back towards levels of 700, 750. So I believe that the prospects over here are far more better as compared to Cadila. But then again, I think it's a difficult play to try and pick up just one of the stocks from the pharma pack. But purely based on charts in the short term and the medium term prospects, I think Glenmark Pharma could probably come back to 700, 750 zone.
Okay, Kunal, coming back to you on this one, and this is another question from Sagar, and I think I'm going to include you also when I ask him to buy me a cutting chai, because this next counter is also making him a lot of money. JK Cement, he bought 6,000 shares at levels of 1,150 and 1,175, and the stock is obviously trading currently at 2,970 or thereabouts. All right. Oh, okay. So we've already got that. Anyway, we've answered that question. I'll come back to you. I'll come back to you on another one then. And let me go across to Sharmila. Sharmila, Raghupati's got a question on HDFC Bank and Infosys, and a lot of people count these counters as portfolio plays. Would you say that you should bother about an entry price, or would you say that you would accumulate them over the course of weeks or months?
Absolutely. I think that's the best approach and strategy to take with names like HDFC Bank and Infosys, because, I think this is a question that all of us deal with from time to time personally, as well as, the queries that you get, that if you are constructing a portfolio, which are the stocks that should be in it. And I think both these stocks deserve a place in a long-term portfolio. So yes, it all depends on, for instance, when I bought Infosys, I possibly bought it at the highest price ever. This I'm talking of pre-2000 sort of levels when the stock was at 10,000 rupees. But I'm still making money on it, post that. Because I've held on to it long enough and I've been rewarded with bonus and bonus shares and stock split, etc., etc. So it really doesn't matter. What I'm trying to say is that what price point you buy, because the good companies do reward you. Also, a stock like HDFC Bank, now its growth has slowed, but even then, quarter on quarter is growing at 18%, which simply means that in about 2.5 years, your money should double. So I have no really in recommending both these as the portfolio stock.
All right, our next query is come from Mahendra Patnaik, and this is on Yes Bank. He's bought Yes Bank at 14 rupees per share last year. He wants to know what's the take on Yes Bank. Sharmila, over the last few days, we've got a lot of investors actually asking about Yes Bank. Most of them have actually bought this particular stock at a lower rate as well. Some of them are at quite a higher price, a price that we've actually not seen over the last 2-3 years. So what's your take coming in on Yes Bank?
That's what a little disappointing, because honestly, I was also contemplating that maybe, the stock has come to levels because, there was a lot of, as we all know, there's a whole story that's played out in Yes Bank. So I don't want to repeat that. But the point is that now it has moved on from there. And then now you would expect some sort of something to show in the numbers to sort of indicate that things are getting on a better, stronger foothold. But I didn't really get that sense from the numbers. So it's like I'm no longer very worried about the stock to say that, no, you must exit, but it's still not a buy for me. So, it's in that in-between zone. So if he has the stock, he can continue to hold, but I really wouldn't recommend a fresh buy just yet.
Manoshi Gupta has got a question for you, Kunal, and this is Venki's. Bought 20 shares at levels of 2,350. He's not making money at this juncture, but it's not too far away from the buy price. Would you hold on, and where would you put your stop loss on this trade?
Hold on. I think this is the first month of a strong breakout for Venki's. The last 7 to 8 months, again, it had been more sideways. And when you typically see a sideways price action and then a breakout, it results into a more of a domino effect for the stock price, where it tends to move up higher and gain a lot of traction for itself. So I think in that aspect, Venki's is something which I would advise to hold on. Give it at least another 3 or 4 months, if not more. I would sense that once if this breakout is successful and it sustains, then the stock would probably come back to levels of even 2,700, 750 as a moderate kind of a target zone. So I would suggest a hold on Venki's India, given the kind of breakout the stock has seen this month itself.
All right, so that is the take coming in on Venki's, but unfortunately we are out of time for the query segment. But before we wind down and thank both the experts, Kunal, I want to know what are your high risk and low risk ideas for the viewers today?
I'll suggest two buy calls. The first one which I'm suggesting is a BAN PFC, a power finance stock nearing a very strong and a classic inverse head and shoulder breakout. So would suggest that as the first buy, targets of 130. So expecting at least another 10 to 12% upside from current levels, stop loss to be kept at 114 levels. And the second stock which I'm suggesting is a BAN BEML. Even that stock is forming a classic bullish flag pattern on the hourly charts, which suggest a buy with a target of 1500 and stop loss to be kept at 1275.
Okay, Sharmila, could you tell us what your ideas are for the viewers?
Yes, my high risk idea is UltraTech Cement, and high risk really is the fact that every time we get into this lockdown sort of situation, you will see some disruptions in the way things could construction activity, etc., could proceed for UltraTech. But having said that, I think cement as a sector has had a very strong quarter, and going ahead also things look good. I think a while back you spoke about JK Cement. That's another great stock. I think even UltraTech from current levels has an upside of about 10 to 15%. But you need to factor in these near-term sort of drawdowns, because we don't know how long this whole lockdown and given where our numbers are, how long this situation is going to continue. So going by that same theme of the kind of numbers that we are that we show and how it has really impacted a stock, which is my next stock, which is SBI Life. What we've really seen is the data has shown that life insurance, the first new premium has grown by 44%. And of course, SBI Life has not shown such a great growth, but the fact remains that they have a very good distribution network. The valuations are attractive. And this is, I think, we are sort of under-insured in terms of, if you look, sort of on a pan-India basis. And I think this is a sector that will continue to do well. So SBI Life would be my low-risk idea.
All right. Thank you, Kunal, as well as Sharmila, for joining us on the show, giving us your take on which stocks can one look at, and also resolving all the viewer queries. And on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now, and it's time for us to tell you about the BNSN quiz that we sent out earlier in the day. And we asked you which state contributed to the highest EV sales in India in the financial year ending March 2021. The options were Karnataka, Maharashtra, Uttar Pradesh, and Bihar. It's a bit of a trick question, of course, but the answer was Uttar Pradesh. And one of you got it right. Prashant Kumar, congratulations to you. You've got the answer right, and you are the BNSN quiz champion. All right, now earnings is going to be front and center today with 4 Nifty companies posting their results. But of course, India's largest bank is going to be posting its results as well, SBI. And well, here's Poonam Sane with the details as to what to expect from SBI's Q4 results.
Well, the country's largest bank is likely to report strong profits of 6,400 crore, a growth of close to around 80%. This profit should be supported by a lower base, seasonality in fees, and controlled operating expenses. Margins are seen largely stable at 3.1%, and that should be supporting the net interest income growth, even as loan growth is seen muted at 5 to 7%. On the P&L side, expect some amount of recovery from return of accounts as well. Entire focus would be in terms of the impact of the COVID second wave on NPAs and growth trends. Slippage ratio is seen at 2%, and slippages are seen from the retail as well as the SME book, and credit cost is still likely to remain elevated. The trends that we have seen from the private banks has been that most of the banks have reported lower GNPA ratio, stable GNPA ratio versus the pro forma GNPA ratio of the last quarter. So can we see a similar trend from State Bank of India? That would be the key focus, and of course the entire commentary on the impact of COVID second wave as well as the capital raising plans. In fact, if you look at the stock, it is trading at close to around 1.1x FY23 price to book, and also if you look at the stock, it is the second best gainer on Nifty Bank on a YTD basis, up close to around 40% YTD.
All right, the earnings, of course, are expected before the end of market hours today, so do stay tuned over the course of the next couple of hours, and we'll tell you all about the SBI results. Now, from the metals pack, JSW Steel and Hindalco will be reporting their numbers for the fourth quarter. Let's get a detailed lowdown as to what to expect from JSW Steel, which, as you know, has been one of those metal counters that has rallied tremendously over the past weeks and months. Here's Mubina Kapasi with that expectation poll.
Well, given the way steel prices have rallied, it's unsurprising that we are expecting yet another record set of numbers from JSW Steel in Q4. At least the EBITDA will be at a record 8,005 crore rupees. But yeah, top line as well, we are seeing a growth of 44% in Q4 at 25,780 crores, and margins are seen almost doubling from 16.5% in the corresponding quarter to 31.1%, leading to the quadrupling of the profit after tax as well at 4,200 crores. In fact, it'll grow 5x from 831 crores to 4,200 crores. So, of course, it's going to be on account of the sharp surge in realizations. Remember, spreads in India are at close to record high levels. The EBITDA per ton in the India business is expected to surge 2.2x at 19,010 rupees per ton. International operations will largely be under maintenance yet, but we are expecting big things from there as well. What I would like to watch out for is, of course, more price hikes in Q1 and if there's any impact of lockdowns.
All right, now we spoke to M.K. Surana, the Chairman and Managing Director of HPCL, about the company's gross refining margins. Another company that has reported its Q4 earnings, in fact, post-market hours yesterday. We asked him about gross refining margins. We spoke about inventory levels and other factors that contributed to the performance of the company in the fourth quarter. Listen in.
Yeah, so this quarter, let's say the Q4 of 2021, our GRM was $8.11, in which the inventory gains were $4.61. So the core GRM was $3.50. And for the full year, if you compare, the full year GRM was $3.86, in which the inventory gains were $1.99, and that gives the core margin of 1.87.
All right, as we end the program, we've got the Sensex gaining over 700 points, the Nifty comfortably in the green. It's looking like it's a good Friday. Do stay tuned though, lots more coming up over the course of today. This is ET Now.